We are live. All right, we all see that. We're gonna start out with our song. So here we go.
Bootcamp is about to begin. Rise up, it's time to log in. LP Army will teach you the way to be LP warrior starting this day. We live for the fees we make. Soon it is profits that you will take. The LP Army marches strong. The best in soul and out we sing our song. We live for the fees we make. Soon it is profits that you will take. The LP Army marches strong. The best in soul and out we sing our song. We are LP Army, rise to the sky. Dynamic fees, our battle cry. LP warriors will never die. Bearable we will fly. Rise, new soldiers, rise. Rise, new soldiers, rise. Spot, copy, ask, use them all. Winning's the task, we heed the call. Bootcamp, join our ranks so tight. Listen to the Goose Gang and gain your might. We will print and we will earn. Points to gain as tokens burn. Join the ranks of the brave and bold. Story of the LP Army told. We are LP Army, rise to the sky. Dynamic fees, our battle cry. LP warriors will never die. Bearable we will fly. Rise, new soldiers, rise. Rise. Take the course and earn your role. March with us and earn some soul. Dodge the rug and join the fight. We gain together LP Army might. Make your position and join the pool. Post your wins with Alex's tool. LP Army, we fight to win. Your journey is about to begin. We are LP Army, rise to the sky. Dynamic fees, our battle cry. LP warriors will never die. Bearable we will fly. Rise, new soldiers, rise. Take the course and earn your role. March with us and earn some soul. Dodge the run and join the fight. We gain together LP Army might.
Woo, right on. Okay, guys. Well, that is our little song. I hope you guys are all pumped and ready to rock this because here we go. Welcome, welcome. So today we're gonna cover the basics for you. And in the next lesson, tomorrow it's going to be more advanced topics. Um, so there may be stuff here that you already know, but this is intended for all levels. So we're going to start out with just, our disclaimer. This is some basic stuff. If you don't agree, don't continue. We're not providing you with financial advice. We're not professionals. So you do this stuff at your own risk. So you guys can read. I'm not going to read it for you, but there we go. And then, so these are the prerequisites for the course. You agree to the terms. You have a wallet ready with at least a soul, and it's only just so that you can follow along. we're not charging you. You're not sending us your soul. Um, this is just so you can follow along with the demos that we're going to be doing today and tomorrow. Uh, and of course, you need to be prepared to lose before you win, especially if you're new to this. You start small. It doesn't require a lot to get started with Meteora. Um, in fact, you're even encouraged to lose because you're going to learn from that. Consider those losses to be your tuition for your training. And if you do start winning, don't go all in just yet. You might have just gotten lucky. Wait until you've lost and you've learned from this. Failure is one of life's greatest teachers. And as a weightlifter, I will tell you that failure is the path to success. Well, it feels bad. It's how you gain. And when you're consistently winning, you can progressively increase your investment sizes. Just a little introduction of who I am. I am Heavy Metal Cook. I am the bootcamp moderator. Um, I'm a manager for my day job. I'm a manager for an IT operations team at a major retail company. Um, I'm a very busy guy, volunteer in a lot of things. Youth groups. Um, I do stats and camera operator for American high school football broadcasting team. In fact, I just did that a few hours ago. Camera radio operator, Meteora moderator. Got my feet wet in Ethereum. This is where I got my intro into liquidity providing out there on Uniswap and Avalanche Chain. Trader Joe, if you've used that, you may be familiar with or seen something similar to Meteora's DLMM there. Um, I like to do the miners and run workers and stuff to earn tokens, and I've been LPing on Meteora since January. Obviously, I love cooking, weightlifting, and of course, heavy metal. That's who I am. And so we have other instructors here today. Yusuf and Tux have joined us, and hopefully some of our other instructors will be here soon. But they are here to answer questions in the Q&A, and that's where we're going to ask that if you have specific questions about during the course, something comes up, these guys are here to answer questions for you. If you have a question in French, feel free to ask. Tux will take care of you, and Yusuf, he knows Danish and was it Arabic and something else. Scandinavian, I think Yusuf's your man, so he can help you out. But please don't ask your questions in the chat feature. Please use that Q&A for that. So, and moving on. So, sorry about that, guys. To get most out of this course, use that, like I said, use that Q&A. Complete the exercises. We want you to do these things, follow along with us. It's not required, but we can learn by doing. And of course, if you have any suggestions how we can improve this course, please share it with us in our Discord. You may get an email in the future with a survey that's optional. But we'd love to hear from you. And we'll share this again later in the course. This is a link to tools used during this course as well as additional documentation. You can scan this QR code and it will it'll take you to a document that's got additional information. I'll also put a link here in the main chat to that. But it doesn't change. It's just some extra information for you guys. So Testy, I see a question here. You only seen the green vertical line. Is it normal? I don't think so. Everyone else sees my screen okay, yes? Yusuf, are we good? All right,
Yeah,
everybody
we can
says,
see your screen well.
thank you, Tux. Okay.
Yeah, it's all good.
All right, awesome. All right, so we'll cover the areas and functions available
We see your screen.
um, as well as a few basic third-party tools to help you. I'll give you a tour of the platform and explain as many of its functions and features as possible. But by the end of the day, these are the things that you should know. Some basic definitions, some of the very basic things about vaults and farms. We're going to provide some liquidity into a dynamic pool. I'm going to give you a full tour of the DLMM. We're going to do some LPing into a stable DLMM pool and a volatile one. So we're going to start with terminology and definitions. You may already know some or all these things, but it's important that we cover it for all. You got to know the words used in the game before you can even learn the rules. So this is going to get progressively more interesting, but that's our agenda right there on the screen. So now for some fundamentals. This is just a recap of what liquidity is. If you're here, you may already know some of this stuff, but market makers are those who provide liquidity and depth. In crypto, market makers on centralized exchanges such as Coinbase, Kraken, and many others, they typically work on electronic market systems with bid-ask order books. They make money on the bid-ask spread. The spread is usually very small, so they make money on very high volumes. And they do this with high frequency trading. Market makers typically have huge amounts of cash and assets that they both buy and sell on the orders of billions of USD worth. So, yeah, this is talking about here. This is what a liquid asset is. These are the market makers. Okay. And for a few DeFi terms, AMMs are decentralized finance products that allow anyone to become a market maker on a blockchain. It is a protocol or platform where the market making is taking place. Liquidity provider, or LP, refers to the person or firm that is providing liquidity through the AMM. When traders swap through AMMs, they pay fees to the liquidity providers. It's all managed automatically by smart contracts on the blockchain. It's not custodial. Liquidity providers in AMMs profit from earning fees on the liquidity they provide in the liquidity pools. There are many different AMM protocols on different blockchains. Ethereum and other EVM blockchains, there's Uniswap, SushiSwap, PancakeSwap, Trader Joe, etc. Solana has Meteora, Orca, Radium, Saber, and many others. LP can also stand for liquidity pool. You may see the term LPing, which means to provide liquidity, as a verb. You'll learn to figure out the usage based on context. A CLMM stands for Concentrated Liquidity Market Maker, and it allows liquidity providers, or LPs, to concentrate their liquidity within a certain price range. Concentrated liquidity helps LPs earn more fees by specifying a price range in which liquidity will be provided. It also helps traders because it will reduce the price impact of their trades in the liquidity pools. Uniswap v3 was the first to introduce this concept on the Ethereum chain. Radium and Orca on Solana, they operate CLMMs. And here's some graphical examples of these concepts. In a standard AMM, liquidity is spread out over the entire range, putting only a small amount within the current price range, leaving the rest to be idle. It does have the advantage of not requiring any maintenance by the liquidity provider, but you earn less fees per dollar. A CLM style pool allows a liquidity provider to put more or all of their tokens at or near the current trading price and none or much less out on the fringes. This allows you to generate more in fees. It does have the disadvantage of missing out on any fees when the price of the token swings higher or lower than your specified range. You're more likely to experience what I will refer to as impermanent loss when all of your tokens have been swapped for the other and are out of range. When you withdraw out of range, those losses do become permanent. So something that we need to hammer home to you that LPing is not staking. You do not stake on Meteora. Do not be surprised when you deposit into a pool and tokens get swapped for the other. That is the nature of it. In one sense, you're trading, but not really. You are willing to swap back and forth from one token to another, and you may even hope to sell all of one token for the other or not. It's like if you go to the store, a grocer, someone who's selling produce can go rotten, and or just like produce can go rotten, the demand and volume for tokens can drop very quickly. Some meme coins are like that produce, and you don't want to be holding them when they go rotten. Of course, blue chip is a little bit more long term. And Garnax, he had a question that this is beginner stuff, and we are recording it. This is meant for everybody. I understand that you may know these things, but we're gonna get there. It's for everybody. So there's Alex. Hello, Alex. All right. So moving on to impermanent and divergent loss. This can be a complicated topic to explain. We're going to touch on it and provide you with some links to other resources that go into more depth. When you provide liquidity, traders are swapping both of your assets back and forth through a liquidity pool. When this happens, the price changes and it changes the allocation of your assets within the pool. Basically, this means you will have more of one asset and less of the other. Frequently, when you hear this called impermanent loss, but it's more accurately called divergent loss. Divergent loss happens when the relative price between your deposited assets in the liquidity pool changes compared to when first deposited. This is the nature of LP, and it's guaranteed to happen. In other words, you lost more than if you had simply held, or that you gained less than you could have just holding. The bigger the change, the more you will experience divergent loss. But this does not necessarily mean that your LP position has lost value. Assets that remain relatively stable with small price fluctuations are less subject to divergent loss, such as USDC and USDT, which typically stay in a tight price range. Stable coin pools are significantly less risky when it comes to divergent loss. The goal of successful LPing is to generate sufficient fees to overcome those losses. If you're able to close your position and end up with more of both tokens than you started with, then hey, you've achieved your goal. This chart here is a common one shown to explain divergent and impermanent loss, and explaining the math involves Greek letters and more complex math than we're going to do here. There are some links in the bootcamp resources that I gave out at the beginning, and we're gonna link to that again or show you guys that later. but you can deep dive more into that topic there if you need it. So this is an example of divergent loss. This position here started with almost $40 USDC and about 0.25 SOL. And then you can see in the after how it ended up after a while. The position lost about 0.05 SOL, but it gained about 9.5 USDC. The fees were 6 cents, and the initial value started at $81.60. It ended at $81.84. That's a positive divergence of 24 cents. So the total profit of fees and divergence comes out to 30 cents. These terms, divergent and permanent loss, can sound quite scary to some people, especially if you're new and knowing the fact that it's guaranteed to happen whenever you're providing liquidity anywhere. You're always hoping to collect enough fees to not only overcome this divergent loss, but actually profit. So a few more definitions for you guys. TVL, volume, and volatility are explained here. I'm not going to read slides for you guys. You guys can read. And again, Alex is here as well. If you have a question in Bulgarian, Alex is your man. He may be able to help you with Russian as well. But yeah, he's one of our additional instructors and makes a lot of cool tools for us. He's a great guy. Okay. And where is C. Jason? He's here. Hold on just a second, guys. There he is. Jason, promote him. He speaks Chinese, so if you have a question in Chinese, you can ask him that. Just as soon as he gets promoted. So moving on, more definitions. Slippage. When you click a button to perform a swap through any AMM, by the time you click that button and your request is received on the blockchain validator and it's processed, the price may be different than it was when you clicked on that button. That is known as slippage. When you swap through an AMM, you are causing the mix of assets in the pool to shift and the price of the asset to change. If the amount of liquidity in the pool is high relative to your swap, then your swap will have little price impact. If you swap through a small pool that does not have a lot of liquidity relative to your swap will have a high price impact and cause the price to change a lot more. Your market cap, sometimes called MC or MCAP, is calculated simply by the total number of tokens by the total price, by the current price. It's usually in US dollars. Okay. On individual market pages, you will see the 24-hour fee over TVL. This is the yield for the pool by calculating the fees generated in the past 24 hours divided by the total value locked. It's one factor you can use to determine whether or not you might be interested in providing liquidity in the pool. However, take it with a grain of salt. The TVL in pools is constantly changing as liquidity providers enter and exit the pool. The denominator in this metric is changing all the time, while the value of the fees in the past 24 hours does not. That means that the value could be over or understated if, say, whales have made big moves in the past 24 hours. So here, overstated, when a whale is in a pool, they'll generate a lot of fees. When you see the TVL after a whale has exited the pool within the past 24 hours, the TVL will be overstated. If you enter the pool expecting this really nice, sweet rate, you may be disappointed. When it's understated, say for a whale has just entered the pool, the TVL will be higher than it was before they entered. The fees generated in the past 24 hours were done with less TVL, and so now it looks like the pool is yielding less because of that higher TVL. So I don't always pay a whole lot of attention to these. I mean, it's a neat indicator, especially if it's a well-established pool, but be cautious when looking at those. Okay, so now we're going to get a tour of vaults, dynamic pools, and farms. So let me just switch screens here. You guys see Meteora here? Or the presentation? Okay,
Yeah, we
Meteora.
do see Meteora, yeah.
Sweet. All right. So we're going to start with the vaults. Meteora Dynamic Vaults is DeFi's first dynamic yield infrastructure where the vaults rebalance every minute across lending platforms like these right here, Save, Camino, to find the best possible yield while prioritizing keeping user funds as accessible as possible. Now, I personally don't recommend that you deposit into vaults. One thing, you won't earn any points doing that. But it's not necessary. You can. It's a very safe place to earn money, and you will earn these listed APYs. Of course, you could probably find that on some other platform, even better. But these are used in other things, and we're going to talk about that here in a minute. But this is something that you should just be aware of. This is where they put it. This is also, FYI, currently the only thing that Meteora makes money from. They're not currently charging any protocol fees on regular pools. Now, while there's discussion to start doing that, nothing's been decided yet. Currently, this is the only way that they make anything. So, yeah. All right. So now we are going to look at dynamic pools. And here we go. You can see these here, the ones that have the little Meteora logo, they were created by Meteora. The ones that don't have that were created by someone else. They are permissionless. Literally anyone can create one of these pools. We are not going into discussions on how to create pools. That's going to be for an advanced boot camp. But just know that's where this is. You have several different types listed here. You can see here on the type column some of the various things, like this is a stable pool, LST, or liquid staking token. That it's a dynamic pool. There's some that are not, but you'll see the difference between stable and volatile, and these are important. Some are listed as a meme pool. You've got your TVL column. That's how much TVL is in that pool. How much volume, how many swaps have happened in the last 24 hours. The estimated yield of this. And you see this column here, LM APR, that's liquidity mining APR. If you see one of these next to it, it means that there is a farm associated with that, and that's the estimated APR for that farm. Now, one thing that's interesting here, actually, I'm going to pick a different one. Like this one. You'll see in here several things. Obviously, you have your total value locked here, but your virtual price, this is a measure of how much value is in the pool compared to what was deposited. Numbers greater than 1 are good. If you want more information about the virtual price, there's a link in the Bootcamp resources to the docs, the Meteora docs about that. Also, the AMP right here, the amplification factor controls how concentrated the liquidity is in the stable pool. We're not going to go into great detail on that. It's in the docs. Go ahead and read that. But anyway, so we have our volume and we have our 24-hour yield and the 24-hour fee. The 24-hour fee is how much this particular pool has earned in the last 24 hours. This yield number is how much it's earned from the vaults. So because this particular pool has SOL, some of this SOL is being used out here in the vaults. So you are getting double, well, not double, but you're getting paid for both fees and lending yield. Here, your liquidity provider fee. This is the how much you are earning on your liquidity here. So that's the amount you're getting paid. The protocol fee, that's what Meteora takes. Again, it's currently 0. There's discussions on adding these in the future, but right now that's where it is. Okay, so we are going to do a little deposit here. So we have our SOL. You have more than one way to convert this in here, and you'll see whenever we're doing a balance deposit, you can see here that this particular pool is 38% SOL and 61% VSOL. So it's not 50%, okay? Now you can come over here to this swap feature to say swap a certain amount, and you're swapping within this pool itself. You have this nice little feature here on the bottom for Jupiter, and this will get you the best price. So we can say, let's put in, and you guys can follow along with this. I'm going to say 0.25 SOL, and I see it's routing through a few things. We're going to do a little swap here and approve. All right, so now I've got some VSOL. Now we're going to make a deposit. Again, I'm going to leave balance deposit on. If you turn it off, you get a nice little warning. If you make an imbalance deposit, it's going to auto swap some of your tokens for the others, and you could lose money that way. So not a good idea. So we can see here, I chose max for VSOL, and it chose this much, 1.5 or 0.15 SOL. And I'm ready to deposit. While we're waiting on that, you can also see here pool charts. All pools have these handy charts here. Choose the one that you like the most. At the bottom, there's also some trading platforms, but we're not going to discuss those today. All right, so we've made a deposit. You can see here it's worth $62.10. So now while we're here, obviously that's where you go to withdraw. And you'll notice here, over here in my wallet, Meteora LP. So the dynamic pools provide an LP token. This is your receipt for your deposit. You don't want to delete this. You don't want to give it away, because without that, you cannot retrieve your funds. So don't burn that. But anyway, this one has a farm, and you can see here, it's got a link straight to that farm. Farms are also accessible through the menu here. But we're going to go straight to this specific pool's farm. Here we are. Brings you right here. You want to deposit it. And this is actually the only place, I said before, you can't stake on Meteora, but technically in a farm you are staking, but generally speaking, that's not what this platform is. So I'm going to put all of that in there. I'm going to deposit. And there we are. So now I've deposited that into the pool. So I'm still earning off the liquidity that I provided. But now I put it in here to earn some VPT or Volt points. I've got some that I've had in the past. You can see here the weekly rewards. So the project, the Vault or VSOL, they've provided 1.5 million VPT to be issued out every week. That those tokens are not provided by Meteora. It's provided by the project, and typically those things run for about 4 weeks at a time. The project can extend that if they wish, but it's entirely upon them whether they do it or not. You will see here, like these other pools, this Bonk USDC, you'll notice that there is no weekly rewards listed. So currently, there's no point in depositing into this farm because you will not earn anything. You won't earn any extra bonk if you put it in there if there's no weekly rewards. Hope that makes sense. But of course, at any time you can claim your VPT and whatever your thing is, do whatever you want with it. I'll just wait for this. Okay. All right. So success. Now I'm actually going to, for the sake of this, unstake this because I want to withdraw. And you can't, actually, let me go back. Link straight back to the pool. And you can see here, I want to withdraw, but it's giving me this warning. It's saying, hey, you've staked that. You have to unstake them from the farm first. So I'm coming back to here, unstake, withdraw, approve. Okay, now I go back to the pool. And now I can withdraw. You can see I'm getting back about the same amount that I put in those proportions. And there we go. All right. So let's see where I was at here. Okay, back to pools. Let's go back up here. Again, any pools with farms, you can use this link to find those with farms. But again, it's only those that actually have tokens added into them. The LST or liquid staking pools, these are special. And you can see that they were all created by the team themselves. And then, of course, there's multi-token pools, all created by the team. I've never actually heard of anyone ever using these, but apparently somebody does. So I'm going to show you this one, USDC, USDT. This is an outstanding pool, in my opinion, to put money into. And I actually prefer this for this pair over the DLMM. And the reason for that is because not only am I earning that 24-hour fee, I'm also earning yield from the vaults for both tokens because both of these tokens are in the vault. And you will see it is, again, somewhat imbalanced. It changes. This was the last time I did it. It was about like that. And you can see there that it's gotten pretty close to 50%. If you'd like to make this deposit and follow along, just swap yourself some USDC, SOL for USDC and USDT, and make your deposit. Now, again, you're not earning massive yield here, but this is one of the safest plays you can go. You got to think of it as like, say, like a bank account. If you put money into a bank account, how much would you earn over a period of time? This would earn way more. I know that if I put, say, I put in $2,000 into my regular bank account, at the end of the year, I might earn 2 pennies, 2 cents. With this, I'm getting a few dollars a month. So, like I said, great place to invest safe money. Oh, okay. So we covered all of that. Change my sharing here. All right, so we did that already. We deposited into the USDC or USDT pool. Or you could have if you have. All right. So now actually I'm going to show you another feature. The portfolio. The portfolio is where you're going to find all of your open positions. You won't find them like if you just go out there to the pools, you'll notice that you don't see, it doesn't tell me here that I've deposited into this pool. Now it's all found here under portfolio. That's pretty self-explanatory. Oh, and the other thing that it won't do is show you any vault deposits. But again, I wouldn't do vault deposits if I were you. Okay, so now we're going to talk about the DLMM. I know that's what you guys are all waiting for. In one sense, the DLM is similar to other concentrated liquidity market makers, but it offers additional features and enhancements. And it's these additional features that give you, the liquidity provider, such an advantage over to be more profitable over other CLMM type products. This is what makes Meteora, the killer app. Liquidity is placed in bins, which we're going to discuss next. We'll also cover these additional features as we go along, but you can see here these additional features. This is why we love it so much. Zero slippage, price impact on the bins. You can use different strategies to maximize your deployment of liquidity. You can go single-sided. You can put just one token in if you want. The earning of dynamic fees, and of course your strategies are flexible. We're going to talk about more of that here. But bin steps. What is a bin? Well, trades happen at specific price points, and these are called bins. And the difference between these price points is known as the bin step. And only one bin can be active at a time, and only the active bin will have both assets in it. Bins are what hold the liquidity of the tokens. They cannot change in size once set, and each one represents a fixed price. Swaps that occur within a single bin do not suffer from slippage. The range of price that a bin covers depends on its width. Bin steps is what defines the width of the bins. In other words, the difference in price between one bin and the next. And these are defined by basis points. In our example here, we can calculate by multiplying the price by 1.0050. That's 50 bin steps, so 1.0050. If this was a 200 bin step, we would use 1.0200. One bin step is 1.0001. So that becomes self-explanatory. So you can see here the price of SOL for this IO token in this bin is this price here, 0.01231. You go one step higher and it's 0.1237. So that's the math there. So I got all of these here from great instructor Chief. He's actually going to be instructor tomorrow, but I stole these here. Active bin. Again, only one bin can be active at a time, and it's the only one that's going to have both assets. So you can see here, this is all one token. This is all another. Now, here we're going to talk about a lower bin step means these price points are closer together, and this allows for more frequent trades, but because the price can move smoothly and continuously through the bins. So you see low bin step, there's 4 of them versus 1 here in this high bin step. More frequent trades, though, mean more opportunities to earn fees. Each trade generates a small fee for liquidity providers. So more trades, more fees. Easy enough to understand. Lower bin step pools provide a smoother experience for the traders as well. They face smaller price changes between trades, making trading more predictable and attractive. It's probably why low bin step pools tend to get favored by Jupiter. Now the DLMM, it's also got dynamic fees, and this is akin to like surge pricing. When volume and so demand is high, fees get higher up to a maximum of 10% in total. And dynamic fees are triggered when the price is dynamic. So the more bins it moves across to get from price A to price B, the higher the dynamic fee. And this is why choosing a low bin step can sometimes be important. It's not always true, but this is why sometimes it's good for that. So dynamic fees are all about volatility. Large bin steps offer you convenience, and it's typically used for more volatile tokens. However, you can still cover the same range with the same capital in a small bin step pool. It would just be split up across multiple positions and divided into smaller bins. So like this large bin step pool will split $200 worth of assets into two bins from the price of 169 to 169.25, each one containing $100. This low bin step pool will split the same $200 of worth of assets into 8 bins that cover the same range, each containing $25. So there you go. Bins is something that people get tripped up on, and I hope we're covering this well enough for everybody. But moving on, we're going to get into the very basic strategies. So this is one of the main advantages, like I said, the DLMM has over the CLMMs, is the ability to shape your liquidity with these strategies. You can use one strategy or even combine these strategies to shape your liquidity to suit you and your goals for any particular pair. Now, like here on the bid ask, you'll see this term DCA that stands for dollar cost averaging. This is a very popular strategy. Spot, it's pretty safe for almost anything, and when you use only spot, it's like the CLMM because that's how they work. They can only do spot. Curve, you can maximize your liquidity into a specific price range. Like I think most of the price action is going to happen right here. So I want to put the most of my liquidity here. This is probably the least used of the three. I'll tell you a lot of the degens who trade very volatile, wild swinging meme coins, a lot of them are using bid asks or even a combination of things. But here's an example of how you can stack multiple strategies together. Employing the spot and curve strategy is a means to focus your liquidity into a range where you think most of the price action is going to happen, but also leaving some liquidity on the outside to capture during price swings. And the second example is one where I started out with only SOL on one side and added earned fees from ORD into a bid ask. And this way, if the price of the token pumps, more of the earned OR sells at higher prices than lower, giving you more profit. In this particular one, I did it a few times, but that's how you can get funky shapes. So to start LPing, you have to buy one or both of the assets. So therefore, you need to aim to sell what you bought at a profit once it has diverged in your favor from your entry. However, unlike regular trading, you earn those fees, like we said. You can utilize both methods to calculate profit. And this is the two ways. Achieve a positive return from a divergence loss, achieve a positive return from fees. Ideally, you get both. You can utilize both to calculate profits. Sometimes you earn crazy fees, but sell what you bought at an entry at a loss, but still achieve that profit. Other times, your position will move out of range in the positive. Now you've sold what you bought at a profit and earned fees. The DLMM, guys, is a tool, and you use it to manage your risk according to your risk appetite. Sometimes it's better to LP, and sometimes it's better to buy and hold. One is more risky, but has more upside. One will mitigate losses. So make sure you pay attention to these important things to consider. Going to move on. So this is where we get the positive return from fees. Again, I'm not going to read the thing for you, but these are the most important parameters that comes when you're choosing pairs. They generate the most fees: volume, liquidity, and volatility. These are the things you need to consider. What you'll get will be the amount of your volume and liquidity has captured multiplied by the dynamic fee. So allocate your liquidity where you think it's going to capture the most volume. And here's an example of positive divergent loss. It's when your withdrawal consists of a higher value compared to your deposit, not counting those fees. So it's simply, I mean, really, a lot of times think it's buy low, sell high. That's the game, right? Um, and here, this example, one-sided pool is one of the assets. You're essentially DCing out of the price range. So you get that positive plus any fees. Of course, you have the important things to consider here that, again, I'm not going to read the slide for you guys. And I appreciate you guys. I know some of you are anxious for us to move on. You already know some of these things, and I appreciate you hanging in. We've got a lot of newbies as well, so thank you for that. Now we're going to give you a tour of the DLMM. Okay, so tools, the DLMM. So here you can do a search for any token pair, like this. You can type in the pair, or you can just type in one of them. Shoot, there we go. That's weird. But always be sure of your contract address. Like I said here, you can just grab this contract address as soon as this loads. We'll copy this. So say you got the contract address somewhere else from the project or anywhere. You just enter that and you can find by that. Keep in mind that any scammer can create a pool. So be careful. Just because it's here doesn't mean that it's safe tokens. There used to be a toggle for unknown token, but it seems there isn't one anymore. Your columns, pretty self-explanatory. TVL, 24-hour fee. You'll notice here that they've got them grouped. And then you can see here it breaks it down. The 5 bin step, 0.02% pool, and so on and so forth. Not going to read each one, but you'll notice that the empty pools are at the bottom. And it's sorted by this column right here. Of course, you can choose to sort by some other column if you'd like. Whatever works for you. But I like to keep it by the 24-hour volume, because a lot of times this is where the most liquidity is running through that pool. So this is why I might just go with this one. But you can look at other factors here. Like this one, it's had 1.5 million run through this pool, but that's less than half of the liquidity in that pool. This one has had over 7 million with only 749 TVL in there. So it's this particular pool is actually earning in comparison here. So actually, let's go ahead and go into that one. So just a quick tour here. You can see JLP Sol. You click here. You can copy that token address. You can go check it out on SolScan. Rug check. This is always a great idea for you guys. Rug check your tokens. This one says danger. I wasn't expecting that. I've never rug checked JLP before. But there you go. And of course, you can check the bubble maps if you've never used bubble maps. We're going to talk about it some more tomorrow. This is a really cool tool where you can see the distribution of liquidity for a particular token. So again here, this is the 5-bin step pool. This is the base fee. This is the base of what you earn whenever you provide your liquidity. This is what you're getting off of swaps that people do. The max fee is 10%. This is true on every single DLMM pool. The maximum possible fee is 10%. Protocol fee, this is what Meteora takes. Again, currently they're all 0, with the exception of some alpha vaults. We're not talking about that today. There is discussion on this. Nothing's yet been fully decided. That happens in community calls on Wednesdays, so feel free to join if you want to learn more about that. The dynamic fee. So this is based off of the volatility of this token here. And you can see it's a little bit higher. So this is what you're actually earning, okay? This is not a very big dynamic fee. It can go all the way up to 10%. Memes, they'll be much higher, and when they are, that's usually whenever you're making the big money. I take Mario, that dude, if it ain't making 10%, he's not in it. So yeah. I lost my place. Okay, there we go. Here are the built-in DLMM Alex's tool, the P&L and points tracker, and many other things. And then, of course, Geek Lad's profit analysis tool. You've got your pool charts. It'll take you straight to the chart for this particular pool and pair. I'm not going to explain charts to you guys, but feel free to click on those and check those out. It's very convenient. You'll see the current pool price here, which you can reverse to see what that looks like. Total liquidity, this is the amount that you put in. Fees earned, claimed. So until you claim, this will remain 0 no matter what you've earned on your position. This amount is measured in US dollars, and it's the value of the tokens when you claimed those fees. It will not go like if you claim JLP and Sol and then the price of Sol dropped, that fees earned number is not going to drop corresponding with Sol. If you earned, say, $1 worth, it'll continue to say $1 worth no matter what happens to the price of Sol. Actually, I want to show something. This is an example. So you can see here, this has got the little triangle on it. This particular token, G non. That means it's not listed on Jupiter, or it's not verified yet with them. These are the special ones. You especially want to rug check these. Rug check says this one's good, so maybe we LP it, maybe we don't. And actually, we're not going to LP that today. Okay, let's see where I'm at on that. Notes. Okay, let's just go back to NWMs. You've got down here the trading volume. This is how much volume has run through this pool. And it covers about a week. And you could just hover here and you can see the amounts that have run through, the trends that roll. So let's see. Sorry guys, I lost my place. Okay. So here are your positions. It's going to show any and all positions that you've added. You can have more than one. This is where you would add additional if you want. And of course, you have the swap function that swaps directly within this pool. It does not go through Jupiter. Use that with caution. It's only going to work if there's liquidity at that particular price point. Again, handy Jupiter thing guarantees you best price. Go over some settings here. You can see here you can adjust your liquidity slippage. This is whenever you're depositing into a pool and say it's extremely volatile at the time and that price is swinging up or down a lot. You may get failures trying to deposit here. So you want to increase that liquidity slippage if needed. It just depends on what it is. It depends on how much you're willing for that to move. Swap slippage, just like on Jupiter, making any other kind of swap, you're willing to set this, but it only impacts the swap here. So that's what that setting is for. All right. So now we're going to get to the demo that we were scheduled to do. USDC, USDT. We're going to add some liquidity here. And I need some more USDT. I'm going to do a little swap here. And let's say give me 0.1. So I'm going to swap. Come on. Okay. Swap successful. So again, so we're adding a position here, right? We can use autofill, and it's going to use a balance of the two. If I want to put in specific amounts, I can uncheck autofill. If I only want to put in one, I can do that. That's how that's done. This is going to remember whatever you last set it to. So if you keep autofill turned off, or if you turn off autofill, the next pool you go to, it's going to be off by default, or vice versa. So we're going to put about this much in here. Actually, we'll turn off autofill, max. Now you can see here, the default is 69 bins, right? So all of this is USDC, all of this is USDT. Down here, this is where other people have put liquidity within the bins, and you if you hover, you'll see at this particular bin, this is how much USDC is in there and how much percentage of that is or will be yours. You can use these sliders to adjust. This is where we're talking about concentrating it. You can, of course, manually change these numbers here to be whatever you'd like. Well, I'm going to do this right here. I'm going to say, what is this doing? 5. That's not what I wanted. Okay. Here we go. 8 bins. We can use spot. You really, because the price doesn't move too far from this price point right here, curve is probably a better choice. You can see right here the price breakdown of what's needed to create this position. It's about this much in SOL, 0.05. I'll get it back. That is the rent on the blockchain itself. Because it costs this much, it's going to require that rent. You can get it back when you close your position. Now you can see down here, if you need to create new bin arrays, and that happens only whenever you're putting liquidity in a place where no liquidity has ever existed before, you have to create new bin arrays on the blockchain. And since bin arrays cannot be destroyed, you cannot ever get that money back. Of course, it also lists your transaction fee. So anyway, this is only going to cost me 0.05 SOL. It's all refundable. I'm going to drop it in. We're just waiting. And there we go. So now we have a position here. You can see its value. Eventually, this 24-hour V versus TVL will update to something. It's going to depend when we get swaps. This is not an exciting pool at all, but it is definitely a safe bet. Okay. I think we've covered that stuff here. Let's look at my portfolio, and now we can see we've got money here in the dynamic pool and money here in the DLMM. The other features here, whenever there is a fees to claim, there will be a claim button. Yeah. All right, moving on. Okay, so we did that. All right, so guys, and just remember that choosing the right pool is really important. Just dropping your money into any pool, you may not get the best results. There's a lot of factors for you to consider. What parameters do you select when you choose a specific pool with a pair of tokens? Well, bin step and base fee, that has a lot to do with it. Lower bin step, again, the pros there are more volume and therefore more fees. The con is you're more susceptible to price going out of the range. A higher bin step, you're less susceptible to price going out of range, but the con is less volume and therefore less fees, potentially. It's not always true, but potentially. Um, Generally speaking, low bid step is great on pairs where the price is less volatile, high bid step for more volatile pairs. Sometimes you need to find something in the middle. And again, consider other factors such as TVL, volume. Some people look at market cap even. Uh, but be careful with that 24-hour fee. Again, that can be over and understated. All right. I don't see anything in the questions I need to tackle. All right. So something else that's really handy here in the site settings, there at the top, little gear, you can change which Solanas Explorer you prefer. I like SolScan. It's the default. You can choose your own, choose a different RPC endpoint. Um, you can even do your own custom one. This is, I find this like if you are having trouble interacting with the site or things going through sometimes, change your RPC. A lot of times I'm sitting on Helios myself, but you can always change your RPC, see if that helps with any particular site problems. Okay. So now talking about the priority fees, there's a little video here. You can change this at the very top where you can change the priority level. You can use Jito bundles. You can use a mix um, of that in the Jito bundles to make things go faster. You can specify an exact fee, like it won't use more than that, or it will, or actually it'll use the exact fee that you set. The max cap is it won't spend more than that. So if you want things to go through faster, you're having trouble getting transactions to land, try changing some of these settings. It may help you. And then here, the notification bell at the top, a little video showing you how that works. This is what's really helpful to let you know whenever you've gone out of range on a particular pool. Um, so it's going to tell you that. And it's just how it works. Full demo. You can use Telegram, you can do email. It'll also notify you in the app. Okay, so now we're going to do some volatile pools, do some basic strategies. You could follow along if you'd like. So let me change my share here to this. And someone's asked, how can you get the Discord role for attending the boot camp? We're going to cover that soon. Working on it. So let's pick a volatile pool here. The DLMM. Let's go with a simple one. Jupe Soul. And I'm looking at this and quite frankly, we talked about this one earlier. This one looks pretty good. It's low bin step, not a high fee. So I'm going to get some decent trades here. I'm going to go with this one. All right. So I need some jupe. If I don't have any jupe, we'll put in 0.2 sold swap. Now, if you're doing memes, this step is not recommended. Usually you're going to want to go with one-sided. A lot of the like Alex, he'll tell you, man, he's the king of one-sided. And we're waiting. I need to increase this here. Go with this. It fails. What failed? Okay. Oh my gosh. It's not happening today. I'll just wait for this to fail. And I'll just swap directly. Oh no, it did go through. Cool, cool. Finally. Thank you. So now we're going to add a position here. And I am going to put in half jute, half sol in spot. And I'm going to go right about here. I'm going to go 23 bins wide. Again, I'm not putting a whole lot of thought into this, guys. You can get a lot more detailed in your strategy here. This is for demonstration purposes. But I went a little bit tighter because I want to concentrate more on my liquidity here. So I'm going to add my liquidity. Okay. So now I've got 40 bucks in here. I can stack a strategy here if I want. If I think it's going to stay here in this area, I could stack it up like this. If I want to catch it on the wild swings out there, I can put it in bid ask. For giggles, we're going to put this in bid ask. And again, tomorrow we're going to talk about more of the advanced strategies of, designing and shaping your liquidity and some of the best practices there. This is just for the demonstration. And again, you can always create another position. I'm out of sol, but I could create a second position here if I wanted. This is really handy. Like if, say, this particular position went out of range, I can leave it right there and go and put it up higher to run. I do that actually all the time on project tokens that I'm in. But there it is. So we can see we've already earned a tiny bit of fees. If I wanted, I could claim those fees. It's not really worth the money. It would cost me more in sol to claim that than we've earned. But there it is. We've now deposited into a volatile pool. Yay. You guys, forgive me if it's 4:30 in the morning where I am, so a little tired. Okay. So now we're going to talk about full scan. Share screen here. So this is important. We are, and you know what, Jay, if I have time, we'll do a one-sided. But here on full scan, This is a great tool. We're not going to go real deep into SoulScan, but you do need to be able to navigate this. So if you're not familiar, please pay attention. You put your wallet address in the search bar there at soulscan.io. Click on the DeFi Activities tab. This is super useful. It's somewhat newer tool. Click on this tab. It's going to show you everywhere where you added, removed, done token swap. You find your particular transaction that you're looking for. This right here, the signature, also called the transaction ID. You can click to copy right there. You can also search SoulScan by a transaction ID, but you get that, you click on it, you're going to get that information. All right. So guys here, if this is the part that I know a lot of you have been waiting for, and I appreciate everybody's patience with me today. Bootcamp trainee, scan this QR code, fill out the form. And that is to earn the bootcamp trainee role in our Discord. The form tomorrow in day 2, you fill that out, you complete the graduation requirements, you'll earn the LP Army Private. That comes tomorrow. This is going to be open only for 1 week after the end of tomorrow's live session. I will not be issuing roles until after forms close. I'm going to repeat this. Forms close in 1 week after the live session. I will not be issuing any roles until the forms close. So please be patient. And just a quick, actually, we're going to talk more about the roles here. LP Army Private versus LP Army. I got another slide for that. But I'm going to leave this up just for a second while I check for questions. What do you need to scan this code? You can use your phone, but I can put this particular code in the chat. If you'll give me just a second here. But we do not share these codes in our Discord or anywhere else. You have to get it from Bootcamp. Oh, come on. There we go, day 1. All right, there's the direct link there in the Zoom chat for the day 1 form. Someone asked if you are a returning trainee, do you have to fill out the day 1 form again? No, you do not, because you can't get double trainee role. So it will not do you any good to do that a second time. So yeah, I've had that up for a bit. I've set the link in chat. We're going to move on. All right, so really quick, we're going to talk about the point system, the 10% stimulus proposal. All liquidity earns points at these rates. 1 point per $1 of TVL per day, 1,000 points per $1 of fees earned per day. That's on all pools. It does not count in vaults, but it does count in dynamic pools, DLMM, multi-token pools. So if you have a question, does this pair count? Yes, it does. There's no official points checker. We've got some community tools that can estimate your points on the DLMM. There's nothing that'll check points for dynamic pools. But again, those are estimates only. It's not official. Everything's been calculated in the background. There's no published end date yet for points. There's no date set for the air token or airdrop, and only points count towards that MET allocation at this particular time. So there you go. That's points. Very simple. Now we're going to talk a little bit about our roles in our Discord community. At the very core, you have the team, the Meteora team. Those are the guys who are getting paid. Then you have your LP Army moderators, and they all have LP Army mod after their name. And then the bootcamp instructors, such as myself, Tux, Yusef, Alex, these guys here. Then we have the LP Army. So LP Army is different than LP Army Private. LP Army is not a role that you can fill out a form to get. It's like an honor bestowed upon you. We give it to those who are extremely helpful. Perhaps they created guides or tools or something like that. They're active and just really helpful within our Discord. The moderators choose these people. It's like, hey, I want to honor this person with this particular role, LP Army. LP Army Private is the role that you can earn, and that QR code will be tomorrow. That's for graduating boot camp. And boot camp trainee is for attending to day one and listening to me go on about all the wonderful basics of Meteora. You get a role just for that. So awesome. Okay, so now we'll just do a little bit of promotion here for the LP Jam sessions. Don't confuse boot camp with jam sessions or jam sessions with boot camp. This is when they happen every Monday, 2:30 p.m. UTC. They don't necessarily always run 2 hours. Yusuf, I believe, is still doing those with the lead, Bob. Is that correct? Yusuf, you're still there partying with Bob? Hello?
Yeah. I do.
Yeah. So they get on there and they jam together. They'll have guest panelists. They're using Ben's money to jam with LP that money. You can learn some advanced strategies and TA, technical analysis. You can join that Zoom live on Discord, but it's also streamed out there to Meteora and YouTube, just like this particular bootcamp is. And Bob, who goes by Tom on X, does a write-up for how things went. So feel free to join or watch the old sessions. Now I'm just going to talk really quick about some of our channels in Discord so that, if you're new, this is not all of our channels, but just a quick, what some of these things are, what they're for. The general questions, product feedback, like, hey, I wish for this. You can ask for dark mode like 1,000 other people have, and it's not going to happen anytime soon. Show off your curves. That is where the degens really hang. I like to call it the degen cave. You want to find out about what's cooking. That's where you would need to go. You got a question about, hey, strategy, or learn about other people's strategies for things. Show off your curves. That's the channel to hang. The brand new channel that was created like yesterday, post wins. That's where you go and show off your big fat W's. Or losses. LP Army sharing, that's where, and only those with that LP Army role can post. They're going to put content, guides, minor announcements. That channel is not for general questions. Just chilling. You can go see some of my flex picks there, vacations, whatever your interests are. If you're the dead LP Army, go explore that. I'm not going to get into that deep. IamDead.xyz. You can learn about that token, community token. And of course, you can report scammers there. So those are some of our channels. That's not all of them, but that's some of the basics. And now it's time. See if we got any extra questions. We've got 20 minutes left. Again, if you're not out there, if you're coming in from X or YouTube and you're not on our Discord, please join us right there, Discord, Meteora. We'd love to have you. And of course, you can't get your role if you're not a member of our Meteora Discord. So, Dead, someone asked here, Dead is an NFT. So if you are familiar with the token WEN, WEN, that was an NFT that got fractured into a billion pieces. Dead is exactly like WEN. And in fact, there's a WEN Dead pool. So if you really want to understand it, you need to go there to the Dead channel and you talk about them that there. But I'm glad that made it awesome for you.
Yeah, I guess it's important to note that it's not necessarily linked to the Meteora team. The Meteora team is not behind that. It's a
Right.
community created project, right?
Correct. Yes, it is a community token. And Ben, the founder, he's as he would say, he is just the janitor of that token. So thanks for pointing that out, Yusuf.
Of course.
And we have some time. People wanted to see a one-sided deposit, so we can do that. We've got time for that. We'll do a little share. And what did I do with it? Oh, I've got too many things open. There we go. All right, you guys see Meteor, right?
Yes,
Okay.
we do.
All right, cool. I'm actually going to go to my portfolio. And we're going to, I'm actually going to withdraw this stuff. You guys feel free to withdraw. We'll pull out of the, now you won't see here anywhere listed, you'll notice guys that you didn't see, like nothing is telling me how much I've earned in fees, right? The way you know how much you've earned in fees is you do the math. You know how much you put in versus how much you pulled out. That's how dynamic pools work. But here at Juke Soul, there's multiple ways to do this when you withdraw. We click on this withdraw button. I should have covered this earlier. You can choose percentages. You can type percentages to withdraw. If you want to withdraw all and close that position, you have to do 100%. I'm going to withdraw and close that position. And you'll notice here that I'm getting back my 0.5, 0.05. And that also claimed the fees at the same time. My 24-hour fee over TVL updated. And now it's closed. So one-sided position. I'm going to go with 0.3 Sol. And this is a common one you'll see in memes right here. I do one-sided just like this. Now I actually, as a personal preference, I like to lay down a little bit of spot and I'm leaving a little bit of extra room. So if I earn any fees with Jute, I can put those up here. I can put just the jupe up here. I'm going to add my liquidity here. And now I have a one-sided position with only SOL. But I'm going to make it a little bit better. I can't put that much in a bid ask. Again, this is common with your memes and more volatile ones. This may not be what you want to do for a more stable pair like Jupe Sol. But there you go. Now I have a nice little spot plus bid ask position, and it's all one-sided. And as soon as I earn some Jupe, and let's just say that I claimed some fees in Jupe, say I earned one Jupe, I can put that in there like so. And there we have it. And as I earn more compound, I can add more. So that's that. Let's see. Is there someone? Oh, Tex is answering. Okay. Anybody have any other questions? This is your time. We have 15 minutes. Happy to answer whatever I can. Appreciate you guys hanging and sticking in here with us today. And if you don't, here is those bootcamp resources again, those links. Just scan this QR code and just additional information. So someone asked here, sorry if I missed, can you add more liquidity with starting a new pool? So I'm not sure what you're trying to ask here, but you can add more liquidity to an existing position. You don't have to open a new position. If you're not familiar yet, I don't recommend opening a new pool, but I'm not sure that's what you were trying to ask. So Bob asked, does this method now sell the SOL to Jupe as the price of SOL goes up? I think you're referring back to this here. And just jump back over here. Yeah, someone's asked and answered the autofill here. So what happens here in this position is as the price moves up, the Jupe is going to be converted into SOL. If the price here moves down, it's going to be converted into Jupe. And one thing that can happen is it'll move out of range, one side or the other. And when that happens, you have multiple choices. You can close that position. You are realizing impermanent loss at that point or divergent loss. You're turning that into permanent loss. It sells all the way up, then you know what? That's a positive, and you can call that a win and walk away, and that's great. If it goes the other way, it's not so great. One option is to wait. You think the price of that token is going to come back, then just be patient and wait. If you want to keep earning fees, add a new position. Add some more to that bad boy. Set a second one. Now, right here, this is roughly about where I entered. It's up one bin from where I entered. But withdrawing like right about here, that's pretty close where I entered, and that's makes your impermanent loss essentially zero. So yeah, I think I just answered that one. Tux typing, can we create separate multiple positions in the same pool? Yes. Actually, let me just do a demonstration here of exactly that. Want to ask, show how to collect the fee? Well, you click this button right here, claim all fees. This will collect all fees from all positions that you have open within the specific pool. Each particular position also has a claims fee button that you can click to claim the fees for just this particular position. That makes sense. Well, I don't know why this is taking so long. I get impatient. And that failed. Probably increase something to make that happen, but I'm going to add a little bit here. Just for giggles. I'm not getting crazy in my strategy here, guys. I'm just demonstrating the second position here. Okay, so now I have two positions at this price range and this one at this price range. This one is slightly, let's see here. Yeah, you can see the difference. This one's probably wider. But there you are, you have two positions. And you can have a whole bunch of them. I've got pools that I've got, like 8. Just because I don't want to realize the impermanent loss from those, but I think the token is eventually going to come back up there. Okay. The form. Yeah, we can get, oh, there we go. Tuck shared that form. That's the day one form. You want to fill that out to get your Discord role of bootcamp trainee. Again, this session is recorded on YouTube and X, so feel free to go back and rewatch. You can watch it multiple speeds, so you don't have to hear me talk for 2 whole hours all over again. But yeah, you can get that there. Anything else?
I think we're good.
Okay. All right. Well, awesome. I appreciate everybody showing up today and instructors for helping out. You guys are awesome. Thank you so much. And so my name's not, oh yeah, tomorrow. Rock on, guys.